Hey guys, what is up? Faz here. In this video, I will teach you a new ICT based trading strategy. Actually, ICT himself revealed this strategy in his live Twitter space. And he says that you can quit your job within 90 days if you use this model. This model does not require daily bias or any knowledge about the higher time frame trend. You simply follow these rules and you will become profitable. I back tested this and it works wonders, guys. Trust me, it really does work and it's really easy. I have seen a couple of videos on YouTube about this strategy and I believe some of them explain it wrong. So here are the rules that you have to follow. Okay, so at 9:50 a.m. right, you have to come up to your charts. Okay, at 9:50, right, this is when you come up to the charts, right? New York time. So make sure your time zone is set to New York, right over here. Then at 9:50, you want to mark out, you are on 5 minutes, okay? So on 9:50 a.m., you are on 5-minute time frame. On the 5-minute, you just mark out the recent low and high. It's really that simple, okay? Recent low and high. So it's going to look something like this. So now your low is this and your high is this at 9:50, okay? Our trading time when we have to take entry is between 10 a.m. and 11 a.m. So your entry must be during between 10 a.m. and 11 a.m. New York time. Now at 9:50, you can start looking for liquidity purge. So at 9:50, you mark out the high and low. Let's say there is no a clear high or low at 9:50. You can wait till 9:55. No problem at all. At 9:55 or 9:50, you mark out the low and the high. Recent low and high doesn't matter. Don't look at the previous price action. Just stay here, mark out the low and the high at 9:50 or 9:55. Then look for price to either take out the buy side or the sell side liquidity. So look for price to either take out the high or the low. So let's assume that price takes out the high over here, okay? And the high is taken out, let's say at 9:57 a.m. okay? Remember, our entry must be during 10 a.m. and 11 a.m. So once price takes out liquidity, right, you want to drop down to 1 minute time frame. So we were on 5 minutes, now we drop down to 1 minute time frame. And we look for a shift in market structure. So let's assume there was some structure here and price breaks this structure right over here. Once price breaks, you want to identify a fair value gap, okay? And you simply want to take your entry from that fair value gap, right? And you want to go short right there, put your stop right at the high, this high right here. Your first partial is going to be at the fair value gap here. If there's no fair value gap, you can target this low. So your first target would be this. Actually, I would take my first partial at 1 to 2 in this example, of course. And then I would hold some of my position till this final TP. You must get your entry at after 10 a.m. It could either be at 10 a.m. or after 10 a.m. okay? So let's say clock hits 10 a.m. or 10 a.m. Yeah, 10 a.m. 1 minute, let's say, okay? Price gives you an entry, you can target that level. Now, ICT says that the 5 handles, he talks about 5 handles that they are guaranteed if you take your entry like that, okay? But according to my back testing, according to my back testing, you can get more than 5 handles, and that is why we target, the fair value gaps and liquidity levels. Now, I recommend that if you don't get an entry before, let's say 10:50, I recommend that you don't get in the trade because the last 10 minutes are, I don't know. I don't trust them. So let me repeat the rules again. At 9:50, you come up to your charts. You mark out the recent high and low, okay? There are liquidity levels on the 5-minute time frame. And then you look for a liquidity sweep. So after 9:50, you look for a liquidity sweep. It can happen like that. It gives you a displacement and a market structure shift with fair value gap. You take your entry from fair value gap after 10 a.m. After 10 a.m. Your entry, I repeat, your entry must be after 10 a.m. Okay, and it's gonna take out this liquidity level most of the time. Okay, so I will give you guys a couple of examples. I do not want to overcomplicate this. It's really that simple, guys. At 9:50, you mark out the low and high, look for a liquidity sweep, look for a market structure shift, take your entry after 10 a.m. and target the liquidity that the price is heading towards. Okay, now this works really well with indices. It does work with Euro USD as well, but I would stick to indices for now. Okay, and yeah, so I will give you guys a couple of examples, and after that it's gonna be absolutely clear to you guys. All right guys, so here is example number 1. I am on NAS 100 and you can see we are at 9:50 a.m. So you want to come to your charts at 9:50, right? And you want to mark out the recent low and high right here. So as you can see, we have marked out the recent low and recent high. After that, just drop down to 1 minute time frame. You can see low and high. Now we want to look for a liquidity sweep. So this right here is a liquidity sweep, right? And if you can see right here, we do have a shift in market structure, but there was no fair value gap here. So this is still not valid. And we have another break, but there's no fair value gap here as well. So we want to wait. Price takes out this low again, right? And we want to wait for a market structure shift with fair value gap. And this right here is when we get our market structure shift with fair value gap. Then you want to mark out the fair value gap right here. You want to take your entry from that fair value gap, put your stop right below that level, and target the buy side liquidity. So now as you can see, the risk reward is very low. And that is one downside about the strategy. You can sometimes get a risk reward like 1.47. I wouldn't say it's a downside, but it really varies. Okay, so you won't get a fixed risk reward with this strategy. Although sometimes you're gonna get 1 to 3, 1 to 4. Okay, I shouldn't have said a downside, but it's like you can say a con of the strategy. Okay, so I would at least go for 1 to 5 here. So let's say what happens. Price taps into our fair value gap. So we are just following the rules. Okay, we are not gonna take 1 to 2 because our level is this and we are targeting this level of liquidity. So let's see how this plays out. And right there, your take profit was hit. So this is a very mechanical trading strategy, guys. You don't need daily bias. You don't need anything. This simple model can give you up to 65% win rate. I have back tested this. I spent the last couple of days back testing this strategy like crazily, okay? And I know it works. I have back tested this. Trust me. So before jumping onto the live charts and trying this out, I want you guys to back test this as well on S&P 500 and NAS 100. So as you can see, we filled the fair value gap. We had a market structure shift. We also had market structure shift here, but there was no fair value gap. Over here, we did have fair value gap, and our entry was at 10:17 a.m., which is a plus point. And our take profit was hit at 10:22. So let's see what happened with price. And as you can see, price dropped down. So this is rule-based strategy, guys. You see, it took out the buy side and then it went towards this direction. So this is like a algorithmic macro, okay, this whole thing. So let me give you guys another example. All right, guys, so here is example number 2, and that is on NAS 100 as well. I'm at 9:50 a.m. So I mark out the recent high, and this is a low, okay? As you can see, this is a low. So now what we will do is we drop down to 1 minute time frame and we look for liquidity sweep. So you can see we took out the buy side liquidity. So now we are anticipating a market structure shift, and we get this right here and also right here. So now there are two types of market structures. Let me just explain this real quick. This is a demand zone, okay? So if a demand zone fails, I can consider this as a market structure shift as well. And we also have the structure break, so you could consider this as well. I prefer both, they both work, okay? Anyways, we do get a market structure shift right here. And if I play this through, you can see that we do have fair value gap right there. And essentially our range is very small, so I'm going to take my entry from this auto block right here instead of the fair value gap. You might miss like a trade like that, but it just depends. Okay, so now when we target this low, you can see it's 1.84. so what I can do is just go for 1 to 2 at this point, because price is going to just go back down here a bit. Like, price will not just come back to your liquidity level and just touch it or break it like that. Of course it can, but let's just go for 1 to 2, because if you go for like 1.87, it doesn't look aesthetically pleasing. So yeah, let's just do 1 to 2, and you see we get our entry at 10.11. Our entry must be after 10, so this right here is our entry. We hit our take profit level right there, and if I play this through, you can see we just kept going down. So it all comes back to your trade management. Okay, I do not have a rule for how you should manage this trade, but I just follow this rule where it just takes out this level and I'm out of the trade, just like ICT teaches it. So trust me guys, this works like wonders. Just go and backtest this, and yeah, let me give you guys one more example. And yeah, all right guys, here is example number 3, and you can see I just showed you guys these examples in the recent 6 days. Okay, so I'm showing the third one on 28 March, so it happens every single day. Okay, so I'm at 950. We do have a clear low, but we do not have a clear high here. And at 955 we do get our clear high over here. Now we wait for liquidity sweep, which happens right here. Let's go to the 1 minute time frame, and you can see we took out the liquidity, and we did have a shift in market structure right here, leaving behind this fair value gap right there. So I would go long just right here, put my stop below the first candle of the fair value gap, and target this level. This is 1.69, so let's see how this works out. We get our entry, and our take profit gets hit instantly. We do go up, and we actually, you could have gone for 1 to 2 because there was fair value gap right here that needed to be filled. There was this auto block, so you know, you could have gone for 1 to 2 right there. Guys, this is magic, trust me. And we're just getting started. Okay, ICT is gonna teach a lot of other stuff, and if you want to learn those stuffs just like how I explain this, you know, I'm gonna explain them in easy words. You can just hit the subscribe button. And if you want to learn my personal trading strategies, you can just, you know, join the community. You can buy the course, and then you will be invited into the Discord server where I share my own trades and all, but it is not necessary. So yeah, I hope you guys enjoyed this strategy. Go and backtest this, go and try it out on demo accounts and all, and I'll see you guys in the next video. Goodbye.